Now I'll be audible. So, very good morning and welcome back to Crack Grade B. What I wanted to tell you all is that today we'll be completing the session on budget, right? Budget related highlights, and from tomorrow onwards, we are going to be talking about MCQs, right? So what I require from you all is one more thing. The PDF of this budget highlights is available in your paid course, so you can access this PDF from there itself. Apart from that, if someone is not having a subscription of paid course, so what they can do is they can just revise the video again. Fine. So why I want this? Because tomorrow by mean I want to say that day after tomorrow, then whenever at that particular time we'll meet, we'll be discussing about the MCQs, right? So I will be trying that I should include as diverse MCQs as possible, so that it will be a great help for us. Fine. So let's start with the discussion today. Yesterday we had completed the indirect taxation, that means as part of your custom duties. Till that point we have already covered, right? Today we are going to cover and we are going to talk about the direct taxes, some other provisions, some allocations, as well as in the budget from where the rupee comes and from to where the rupee grows. So these are all the things that we'll be talking about in today's lecture. First of all, see the direct taxes. So taxpayer portals has received maximum of 72 lakhs returns in a day. We have already read this, right? So not going to cover this. Next is MSMEs and professionals. So MSMEs are growth engines of our economy. Micro enterprises with turnover of 2 crores and certain professionals with a turnover of 50 lakhs, they can avail the benefit of presumptive taxation. Limits have been enhanced to 3 crores as well as the 70 lakh, 5 lakhs respectively to the taxpayers whose cash receipts are no more than 5%. Now understand this, what is the meaning of presumptive taxation? So there is a section under income tax, section 44 AD. That particular section says, suppose, what is the normal way of income tax calculation? First you have to show what has been your revenue. Right, this is I am telling the normal way of income tax calculation. First anyone has to tell what is their revenue. Then they have to deduct the expenses. After deducting expenses, what they will get is income, and then slab will be applicable on it. Right? So this is the normal way of income tax calculation. But what happens under presumptive taxation is that government says, okay, you do not want to maintain books of accounts, you do not want to tell us the revenue as well as expenditure. So this is the scheme for small taxpayers, right? Those who do not have that much turnover. So earlier the limit was 2 crores, right? If your turnover is up to 2 crores, so you can just pay 8% of your turnover as a tax, right? 8% of your turnover as a tax you can pay, and you will not have to maintain any books of accounts. This was the provision. This is called as presumptive taxation. We have presumed it. And for professionals, the limit was 50 lakhs, but now the limits has been enhanced, right? And the limits has been done to 3 crores as well as the 75 lakhs. But here also there is a catch. What is that catch? In this particular thing, government says if your 100% transactions are digital, then we are going to charge you a lesser amount of tax. That means approximately at 6%. But if your turnover, your transactions are not completely 100% digital, but if at least 5% transactions should be digital, that means the revenue that you are earning, at least 5% should be digital in nature. If that is the case, you will be eligible for this particular presumptive taxation. Have you understood this? Were you able to understand this? Now next we are going to talk about the cooperatives. So what has been the new changes that has been introduced for the cooperatives? Let's see. So new cooperatives that has commenced manufacturing activities till 31st March 2024, they will get the benefit of the lower tax rate. We have seen that this kind of provision was there for the manufacturing entities as well, and similar kind of provision has been introduced for the cooperatives. You will be charged lesser amount of tax. Next, a higher limit of 2 lakh per member for cash deposits and loans in cash by the primary agriculture cooperative society. So please understand this, that the government of India is promoting digital transaction. It generally curbs the cash based transactions. Fine, it does not want that you should be dealing in a cash based transaction. So but there are some peculiar conditions, like primary agriculture credit societies, they are working at the village level, at the block level, right? People there, they generally what you can say, transact in cash. Hence these particular credit societies, they have been allowed that 2 lakh per members, this is the maximum cash deposit they can do, and as well as loans also in cash is allowed to them. Next is a higher limit of 3 crore for TDS on cash withdrawal is being provided to the cooperative societies. So suppose now you are an individual, right? Obviously we are an individual, and from my bank account in a financial year I have withdrawn cash more than 20 lakh rupees. In that case, government says please give us the TDS, right? Because you are withdrawing too much cash. Cash leads to black economy, right? We all know that. So government does not want that. Government wants that everyone should be doing digital transactions, so that we know from where the money has originated and to where the money is going. But in case of cooperative societies, just think, the members are the small farmers as well as the small people. Now I guess audio must be clear. Is it? Those MCQs will be related to budget only as of time, because I am discussing budget, right? I have not discussed economic survey, so I'll be talking only about the budget related MCQs. And what I also want is, tomorrow there should be, tomorrow means day after tomorrow, everyone's participation should be there. You should be thorough with all the budget highlights that we have done. Please be focused on any kind of limits, any kind of what you can say, which has been given. Like in this case, the higher limit of withdrawal for cooperative societies has been given at 3 crores. So you should be remembering this, right? This is the, thanks. So this is the thing that we are going to study day after tomorrow, and till the point of time everyone will not answer me the MCQs, I will not move forward. So please be prepared for that. Now let's see, sugar cooperatives, they can claim payments against sugar farmers. See, this they always have this perennial fight between the sugar cooperatives as well as the sugar farmers, right? Both of them are facing losses. Government is not, the payments are not released to the farmers on time by the mill owners. So there has been a constant fight among them. Now government has said that whatever payment you have done to sugar farmers before 2016-17, you can treat that as expense, right? So hence it will allow them some kind of leeway. Now this is not that much important, right? Not that much important of a piece information, so you can just skip this. Next is startups. It is an important piece of information. India is now third largest ecosystem for startups globally. Again, a very important piece of information which you should be remembering. Next, it ranks second in the innovation quality among the middle income countries. To extend the date of incorporation of income tax benefits to startups from 31st March to 31st March 2024. That means if any startup is being incorporated within this particular time period, we are going to provide them income tax benefit. What kind of benefits? See over here. So benefit is like they can carry forward of their losses on change of shareholding from 7 years to 10 years. So one more thing, do you guys know that there was an angel tax that was applicable on startups? Do you guys know about it? Angel tax? Great. So the investments that these startups were receiving, earlier income tax department was treating and targeting them heavily, right? These angel funds, but now they have made provisions for them as well in order to give the, what you can say, much needed support to startups so that they can take funding, they can grow further. Next is other major proposals which are there in the finance bill. Extension of tax benefits to the funds who are relocating in IFSC gift city till the year 2025. If you are start operating your funds till the time 2025 in the gift city, then the taxation benefits will be given to you. See, there is a cut-off line, right? We have to determine a cut-off line. Till what time, if you are establishing your organization in a particular area, you will be eligible for benefits. So that cutoff point has been given till 31st March 2025. Allowing carry forward of losses, decriminalization, not very important for you. Deduction from capital gain on investment in residential houses under section 54F is capped to 10 crores. So what happens is, suppose you understand the thing under capital gain. What happens under capital gain? Assume this. You are having a capital property. Capital property means you are having a residential house, right? You have sold that residential house. Fine. If you have sold that residential house, obviously, see, the sale value what you have received less the cost. At what cost you have purchased that house? Suppose you have sold it at 30 crores, you purchased it this house in 5 crores, right? So 25 crores is your capital gain. Fine. Now some deductions are allowed from this capital gain. These deductions are allowed under section 54. 54, 54F, right? Under section 54, if you have purchased an another house property, you have sold this but you have purchased an another house property, then deduction will be allowed to you. 54F, you have made investment in any long term asset, right? Then also in where your deduction will be allowed to you. So deduction is capped up to 10 crore rupees. Fine. In this case, deduction, you cannot take the deduction beyond a price, beyond a limit of 10 crores. For online games, again some changes has been made. See, it is proposed that TDS as well as taxability on the winnings at the time of withdrawal, or it will be charged at the time of financial year ends. Yes, there are indexation benefits. See, there are two kinds of gain, either short term or long term, right? If you are opting, if there has been a long term gain, then cost of indexation benefits are allowed to you. What is indexation benefits? So indexation benefits is, suppose if there is any property which was for 100 rupees in the year 2001, then in the year 2023 it will have a indexation value of around 331, 335, like that. Your government issues the indexes for you, right? So this is made for this particular purpose. Understand this. If you have acquired a property for 5 crores in 2005, right? Now that property is having a value something else. Today you have sold that property for 30 crores. 30 crores less 5 crores, 25 crores will be your gain. But if you will index this 5 crore, if you will make it 20 crores, then automatically your gain will be reduced. So it is a kind of benefit which is provided to you by the government. But I know that concept, but I have not tried to make the concept difficult for everyone who does not have a taxation background. Apart from that, in our taxation related classes, we have already discussed this. Fine. Now see over here. There has been, for online games, there is a threshold, minimum threshold of 10,000 for the TDS removed, right? Earlier what happened, if you are winning anything from the online games, then suppose I am the organizer, I have organized some online games, you have won something in it. Now this is my responsibility. Before making payment to you, I shall deduct a percentage from your payment in order to pay you this to the government, right? 30% was the taxation on the lotteries as well as card games, etc. Winnings like these. But now what government has said, that we are not going to charge TDS. We will not do that. We will take taxation on these particular online games at the time of withdrawal, when you are withdrawing from the bank, or at the end of financial year. We will be doing like this. We will not be charging the TDS. That means at the time of payment itself, we are not going to collect the taxes from you. Now, no treating conversion of gold into electronic gold receipt. We will not treat it as a conversion. See, capital gain is calculated when you transfer any property, when you sell any property, when there is any kind of conversion. But government is saying, please don't worry. If you are converting your gold, physical gold, into electronic gold receipt, we are not going to charge you any kind of capital gain. Fine. We will not treat it as a change in asset. Okay. Next thing is reducing the TDS from 30% to 20% on the taxable portion of EPF withdrawal in the non-PAN cases. Now, PAN number should be there with everyone, but there are cases. Now, don't ask me that who all are the guys who will not be having PAN. There can be so many people who are depositing in the provident fund from the older time period, right? Might so happen that they are not having the PAN number. Obviously you have to apply for PAN number. If someone has not applied it till the moment of time, then these are the provisions. Now understand that under your provident fund, you make the contribution as an employee, your employer makes the contribution, right? Then interest is accrued on your contribution as well as employer's part also. Fine. You have done a service of more than 5 years, correct? Then amount that you are going to withdraw, that will be exempt from taxation. I repeat, any amount that you are going to withdraw after 5 years of service from your provident fund, whether it belongs to your contribution or employer's contribution, is exempt from tax. Now, what we are talking about over here is, just please pay attention. There are some people who might not furnish their PAN. So in case you are not furnishing your PAN account number, then the provident fund withdrawal, if you are withdrawing in excess of 50,000, two conditions are there. You are withdrawing in excess of 50,000 and you are not furnishing your PAN number, your withdrawal is more than 50,000, you have not furnished your PAN, in that case government used to charge, till this particular time period government used to charge 34%, right, a whopping 34%, but government after adding your cesses as well it becomes 34%, but right now government has reduced it to 20%. Government said okay fine, even if you are not able to furnish your PAN, we are not going to charge you 30%, we will charge you just 20%, be relaxed. Right now there has been a Agniveer fund that has been formulated. This fund has been given EEE status. Right now what is this EE status? First of all, exempt, exempt, exempt. That means, first exempt means your investment will qualify for a deduction. When you are making any kind of contribution to the Agniveer fund, that will not be chargeable to tax. This is the number one exemption. Number two exemption is when any interest is accruing on that particular contribution. Obviously you have contributed some amount of money, there will be interest that will accrue on this particular contribution. Any interest that you will be generating in this particular contribution will not be chargeable to tax. So exempt number 2. Interest income is also not chargeable to tax. Now what is exempt number 3? When you are withdrawing the fund from this particular Agniveer fund, at that particular time no income tax will be charged. So these are called as EEE category of investment, right? No taxation when you are contributing, no taxation when any income is generating, no taxation when you are withdrawing the funds from these particular funds, right? Like your provident fund is also under EEE category, but obviously government is going to charge tax if you are not furnishing your PAN number. PAN number is very much crucial, so that's what they have given over here. So the part of your salary that is equal to the invested amount will not be taxable. You are receiving 60,000 of salaries, you have contributed 5,000 towards the Agniveer fund. In that particular case, your now taxable salary is just 55,000. Second exempt means the interest which has been earned, that will also be exempt. And finally, third one is the income that you will generate from the investment at the time of withdrawal. Any amount that you have withdrawn will also be exempt. So this is called as triple E status. Employer Provident Fund, Public Provident Fund, these are also under the EEE category funds. Fine. Now next see, the rate of TCS for the foreign remittances for education and for medical treatment is proposed to be 5% for the remittances in excess of 7 lakhs. Now first you guys have to tell me what is the difference between the TDS versus TCS. What is the difference between TDS versus TCS? Full form I'll tell you. TDS tax deducted at source, TCS tax collected at source. Tell me that. Any differences that you guys might be knowing? I have not received any answers. So because we do not know about it, first let's read what does TCS as well as TDS means, right? So TDS means, as per section 194, the income tax department mandates that any company or individual to deduct tax at the source if payment exceeds 50 lakhs for the purchase of goods or services like consulting, legal fees, royalty, technical service, etc. This is just one part. There are taxation, there are TDS on the other kinds of things as well, right? Like on salary or etc. there is TDS on that. So I'll tell you the basics of TDS. Suppose this is person A and this is person B. Fine. person A is making a payment to person B. Person A is making a payment to person B. So government says that if this payment is above a certain limit, there are different limits in different cases. Some cases it is 10,000, some cases it is 20,000, some cases it is 30,000. So if you are making a payment beyond a certain level, what you should do is please deduct a certain percentage from this. Government said that okay, please deduct 10% from this, right? That percentage A will deposit to the government. Giving you a very easy example, see over here, A has to make 1 lakh rupee payment to the B, but government said don't give total 1 lakh rupees, deduct 10% from this and 10,000 give it to us and pay the remaining 90,000 to B. Now this is a procedure to collect the taxes. When you understand, when government knows that there are certain kind of transaction where this person will not pay tax to the government, so in these particular scenarios government says that please give the tax beforehand, right? The person who is making the payment, he only deducts the tax. Like in case of salary, if your salary is above, you are crossing the advance tax related threshold, then government says to the employer that please give, please deduct TDS from this person's salary and deposit it to us. Obviously, when this person will be filing his income tax return, he will get credit of this 10,000. So we are not worried about that. Government is not going to snatch this. Government does provides the credit when this person is going to file the return. So this is the concept of TDS. Now let's see what is the concept of TCS. So it is a tax which is imposed on goods by the seller, right, who collects it from the buyer at the time of sale. There are certain goods and goods which has been listed on which the TCS will be charged. It is applicable, the threshold for TCS for the sale of goods is 50 lakhs. Now what does TCS means? So TCS, there is a seller and there is a buyer. If you are selling certain goods to this person, for example, there is one kind of goods specifically that is called as tobacco leaves, etc. If you are selling these kinds of goods to the buyer, this list has been mentioned, you do not have to go for that particular list, right? So this is the duty of the seller, that they are going to charge the TCS from the buyer. This TCS is going to be deposited to again the government. So TDS is collected on payments, right? And TCS is collected on a relationship between seller as well as the buyer. That means in a transaction of sale. So that's what we were discussing. I hope now you have the basics of TDS and TCS. We are not going into that much detail because that much is not required. Fine. So the aggregate premium of life insurance policies which are issued on or after April 2023 is above 5 lakhs. Income from only those policies which aggregate premium up to 5 lakhs shall be exempted. This will not affect the tax exemption provided to the amount received on the death of person insured. It will also not affect the insurance policies issued till 31st March 2023. Now whatever policies that has been issued till the 31st March 2023, we are not concerned with that. Now government is saying that any in life insurance policies, right, aggregate of the premium on the life insurance policies which are issued after 1st April 2023, that means the coming April, any kind of life insurance policy and the aggregate premium is above 1 lakh, then the income will not be exempt. Income from only those policies will be exempt to you, those who have aggregate premium up to 5 lakhs only. Now, why this particular initiative has been taken, let me explain to you. Aggregate premium up to 5 lakh, that means the protection will also be lesser. correct? Who is going to take such kind of policy which has got a short or reduced premium? Obviously common people, the person who is belonging to a middle income or a low income group, right? So government wants that any kind of benefit that they will be receiving from this life insurance policy, that should be exempt. We do not want to charge the income tax on the poor people, right? Obviously a poor person will be a person who is going to purchase such kind of policy which has got the total premium payment just 5 lakh rupees, right? So government says we are not going to tax the poor people, but all those persons who can afford paying premium more than 5 lakh, then they should be paying tax as well. We are not going to leave them. Understood this thing? Now the 5 lakh rupees that I am talking is the aggregate premium. I am not talking about the premium which you are paying monthly or the yearly. Let's say yearly premium is going. I'm not talking about that. That is the individual premium. I'm talking about the aggregate premium. The total premium which you will be paying on your life insurance policy. Understood? Now it is the proposed to provide a penalty of 5,000 if there has been any accuracy in the financial transactions which are submitted by reporting financial institutions. Not that much important. Again, these are the things that you can do read on yourself. Next thing that you should be moving upon. Yes. So income tax rate slab, this is going to be our next point. Fine. So to increase the rebate limit to 7 lakhs in the new tax regime, to change the tax structure in this regime by reducing the number of slabs to the 5 and increasing the tax exemption limit to 3 lakhs. So new tax rate looks like this. You have got exemption up to 3 lakhs, then 3 to 6, 5%, 6 to 9, 10%, like that, right? This is going to provide a major relief to all taxpayers. Now, what is the rebate? So earlier what happens in earlier regime, up to 5 lakhs. If your income is up to 5 lakh, understand this. Now let's talk about 7 lakhs only. Earlier what used to happen? Suppose you are lying over here. You have income up to 7 lakhs. This is your taxable income. Fine. In this particular situation, up to 3 lakhs, you do not have to pay any tax, right? In the remaining 4 lakhs, for 3 lakhs you have to pay 5%, and for the remaining 1 lakh you will have to pay 10% because you will be falling in this particular category. Now tell me, up to this point it is clear to you? Fine. So tax will be calculated like this. Up to 3 lakhs, no tax. Then 5% and 10%. Whatever amount is going to come over here, this is totally exempt. You do not have to pay anything. Fine. Then someone will ask, then ma'am, why this particular percentages have been given? Why they have not made it up to 7 lakh 0? So please understand this. We are talking about only those people who are having an income up to 7 lakhs. There are people who might have income up to 9 lakhs, right? So if you are having an income up to 9 lakhs, the total slab will be applicable to you. So this slab is relevant for all those people who are earning an income of over and above 7 lakhs, because up to 7 lakhs you do not have to pay any kind of taxes because rebate will be granted to you. Tell me, is this point clear to everyone? At least say yes or no. Or do you need any kind of explanation, anything which you are not able to understand? Thank you. Okay, great. Now this is all total the explanation that if someone is having up to 9 lakhs, then what is the taxation he has to pay. If someone is having an income of 15 lakh, what is the tax that he needs to pay. These are all the calculations which we are not talking about. Now next is new income tax regime will be the default tax regime. Earlier an option was provided that either you want to come under the old regime or you wanted to come under the new regime. But right now this is the default tax regime. You have to come under this. Next, standard deduction of 50,000 to the salaried individuals and deduction from the family pension up to 15,000 is currently allowed only under the old regime. It is proposed to allow these two deductions under the new regime also. Each salaried person with an income of 15.5 lakh or more will thus stand to benefit by 52,500 under the new regime. How this particular benefit has been derived? After calculating all the kinds of rebate as well. Now what is this standard deduction? So please understand, whenever we calculate income tax, we take out the income under different kinds of heads. So we calculate like this. What is the income under salary? What is the income under house property? What is the income under capital gain? What is the income under other sources? Right? What is the income under profit and gains from business and profession? We calculate like this. So whatever amount of income you must be receiving under your salary hat, 50,000 will be allowed as a deduction. Fine? Just wait for a second. Okay. Now see over here. The limit has been increased to 25 lakhs for the tax exemption on the leave encashment on the retirement of non-government salaried employees. Now please understand this. There are various kinds of retirement benefits that are provided to a person who is retiring, like pension, like gratuity, like leave encashment, right? So all of these benefits I'm not going to discuss the individually, but majority of these benefits are exempt for government employees, right? But these are not these are not exempt for the non-government employees. Hence, now what does leave encashment means? Leave encashment means, suppose in your job you are allowed 30 days of a leave in a year, right? You are allowed 30 days of a leave in a year. Now suppose you are not taking that particular leave. In a year I have just taken 10 leaves. So the 20 leaves which are remaining for me in that particular year will get accumulated. Again in the next year I have just taken 5 leaves. So 25 leaves will be credited to my funds. Now at the time of my retirement, let's say after 20 to 25 years when I'll retire, all these non-taken leaves that has been credited to my account, they are going to pay me this particular amount in cash. This is called as leave encashment. All those leaves that you have not availed during your service time period, now they are going to pay you those particular leaves at the time of your retirement. So government has said that up to 25 lakhs you do not have to pay any tax, right? If you have received a leave exemption till 25 lakh rupees, then we are not going to charge you any particular tax. There is a whole separate calculation for this particular point, like leave encashment, but we cannot go for that. Next is the reduce highest surcharge from 37% to 25% in the new tax regime. This is going to result in the reduction of maximum tax rate to 39% from the 42.74%. So now suppose if some person is earning 1 crore, 2 crore, 3 crore, 5 crore, right? If you are earning in crores, then obviously government has got all the rights to charge you a little bit more. If you are earning 5 crores of income, you cannot just pay the slab rate. No, you have to pay over and above than that, and that is called as the surcharge. Surcharge is applicable on the persons who are earning above a certain threshold, right? The higher your income will be, the higher the surcharge will be. Till now, the highest surcharge was 37%, but now it has been proposed to reduce as per 25%. This will be the highest surcharge, right? Now these are the surcharges which has been provided over here for your understanding, right? So that you can see 10% will be the surcharge if your income is above 50 lakhs but up to 1 crore. That means you are going to pay as per slab rate. That is fine. But whatever tax you have calculated as per slab rate, you are going to add 10% more. Understood this? So suppose there is a person who is earning 60 lakh rupees. He calculated income tax as per the slab rate which we have seen above, and he calculated that his income tax is coming at around 8 lakhs. This is an assumed figure, right? You can calculate for yourself as well. I have just assumed it. This is your income tax. Now surcharge will be applicable what? 10%. So 10% of 8 lakhs. This will be the surcharge. Now the total tax which will be payable by you is 8,80,000. Fine. So this is how surcharge is levied on the income tax, not levied on the income. Understand the difference. It is levied on the income tax which you have calculated. So your income is if it is between 1 crore to 2 crores, then the surcharge will be 15%. 2 crore to 5 crore, surcharge will be 25%. If your income is above 5 crore, then your surcharge will be 37%. So we are proposing this 37% to become 25%. Fine. So now after removing the 37% highest surcharge, there shall be 25% for the income above 2 crores in the new tax regime, while no change in the surcharge is proposed for those who opt to be under the old regime. If you are under old regime, see, by default you will be coming under the new regime, but even if someone wants to go under the old regime, then under the old regime, that means the previous taxation that has been in place from the quite some time. If you are opting for that, in that particular case, surcharges are going to be remain same. So the change in surcharge, it has happened for the new regime. As a result of these proposals, revenue of around 38,000 crores, right, 37 in direct taxes and 1,000 crores in indirect taxes will be foregone, while revenue of about 3,000 crores will be additionally mobilized. So this is the impact which they are telling by the reduction of surcharge that the government is proposing. Government is obviously losing on that particular front. Government is losing out on the revenues. But again, this is important in order to pacify the taxpayers. Now few remaining things that I would like to discuss. Allocation for specific ministries, right? What you can remember is the order, which ministry has got the highest allocation over here. So your Ministry of Defense has got the highest allocation, road transport, railways. Again, the infrastructure is always in the upper ladder if you see. Then consumer affairs followed by home affairs, etc. Now we will be seeing what has been the budget receipts estimates, right? We have already seen at the start of this chapter, I guess in the yesterday's lecture we discussed this. So total budget expenditure is 45. Revenue receipts we estimated at this particular 26 lakh crores. Your expenditure is again 45 lakh crores total expenditure. Next is revenue receipts. In the tax revenue, the maximum amount of tax we receive is from GST, followed by corporation tax, followed by income tax, and then customs. Basically, corporation tax as well as the taxes on income, they remain at somewhat same level, but on some times or in some years they just shift their positions. Next is non-tax revenue. The major source is dividends and profits, followed by the interest receipts. The deficit figure has been given like this. Revised estimates we have already seen. Now the budgeted estimates are revenue deficit will be 2.9, effective revenue deficit 1.7, fiscal deficit 5.9. What was the target that we were having? By 2025, what we have decided that we are going to reduce the fiscal deficit by this particular amount or up to this particular level. Can you guys tell me? What was the target that we have taken? Good, Rishabh, 4.5% of the GDP. That was the target that we were having. Currently, the budget says that in the next year, 5.9 will be the thing. Primary deficit, 2.3%. That means out of your fiscal deficit, if you remove the interest payment related liabilities, then the deficit actually, because of the current government activities, is just 2.3%, right? The definitions we have already discussed, like this definition is important. What does effective capital expenditure means? Capital expenditure plus grants in aid which has been given for the creation of the capital assets. Fine. Apart from that, total transfer which has been made to the states and UTs, it has amounted around the 18.63 lakh crores. Nominal GDP has been projected assuming 10.5% of the growth. This is the growth that we have assumed. Nominal growth always contains inflation as well, right? So there is a difference between the nominal as well as the real growth. Nominal growth consists of inflation component as well. Real growth is nominal minus inflation. Fine. Tax receipts. See, budgeted, what we are estimating for the next year. Direct taxes 6.6%, indirect taxes 5.1%. These are as a percentage of GDP. That means total 11.1% is our the 11.1% of the GDP is our tax collection. Now, market borrowing related things we have already seen, right? This particular part is very important. See over here, government borrowings, market borrowings, that means from government securities as well as the treasury bills, they have got the highest share. Securities against small savings, this has got the second highest share, followed by provident fund, external debt as well as the other receipts. That means in order to fix the fiscal deficit, government borrows like this. The highest borrowing has been done through government securities as well as the treasury bills. Then there are small saving funds. So government borrows against those small saving funds, and these are the second highest borrowing. Then against provident funds, loans are taken. External debt, that means outside of India. All these are in this particular, what you can say, ascending as well as descending order. You should be remembering about it. Now next thing that we should be discussing, these are the schemes allocation, major schemes outlay. You can see them, these has been given. We have already discussed them in our ministry related things chapters, hence I am not discussing them again. The next thing is expenditure on the health. This is still 2.1% of the GDP. Expenditure on the education 2.9%. I am talking about only central government. Fine. Highest, now the next figure is also important. Okay, we are just left with little amount of time. So quickly see this. This particular figure is very important. Whenever you will have this PDF, please remember this particular figure, right? So where rupee comes from in our receipt column. So 34% of the rupee comes from the borrowings, right? Then the next highest amount of income is from GST and the other taxes, 17%. Finally, you have got the corporation tax that the companies pay. Then income tax, see over here. Corporation tax, income tax, I have said, they normally remain at the same level, 15%. Finally, you receive from union excise duty 7%, some non-tax receipts 6%. But what you have to remember is borrowings constitute the highest share from where rupees comes, right? Remember this. If the option is only about the taxes, then in taxes GST gives us the highest amount of revenue. Now next figure is regarding where does rupee goes, where we are spending as much. So first of all, the most amount is spent on interest payment, 20%. After that, the payment is made to the states. States are also transferred their share of central duties. For this particular thing, finance commissions are set up, right, in order to transfer. Then the other things are also there. Central sector scheme, 17% is spent on this. Finance commission and other transfers, finance commission says that give this grant to local body, give that grant to state government. So all that come under finance commission related things. Centrally sponsored scheme, 9%. Defense is again a major component, 8%. So this is where your rupee goes to. With that, this is a wrap on the budget related discussion. I hope you must have understood this. Do not forget to like this video and please be ready for Monday, right? We are going to discuss the MCQs related questions and I want the participation of all of you. What you have to do is just please revise all the budget related videos that we have discussed and you will be ready for it. So thank you so much for joining in.